2022 was a crazy year when it came to Toronto real estate, with some high highs and some low lows. We're going to go through all that information with this year, go through some purchasing numbers, some rent numbers, see where housing looks like, and look to the future and see what 2023 has to offer. But this is what happened in Toronto real estate in 2022. If you haven't watched me before, my name is Gabriele Battista from Homes into Reality. I'm a real estate agent in the GTA area, and my goal and my passion really is to help make first-time buyers out of the Toronto market. A lot of young people, particularly in Toronto, because it's such an unaffordable place to live, people have unrealistic, they don't think they can ever purchase a property in Toronto. And, a lot of that is because, there's a gap of affordability. The second reason really being there's really a lot of gap of education because I think it's a very underappreciated area of first-time buyers, and they need the support to help them get into the market and help them learn in that long process from, let's say renting the first home to buying the first home and for the rest of the real estate journey on. So that's my job over here. If you want to see more of this type of content, subscribe to my YouTube channel and check me out on Instagram. I post content weekly on there to help first-time buyers become future homeowners. The first thing I'm going to do is go over where I saw real estate going over the past 12 months. I usually break it down to about 3 phases. Again, they're very informal, kind of the way I saw the market, but it's definitely going to help you understand the craziness and the ups and downs that we saw in the Toronto real estate market. So we split it up into 3 different sections, starting with the first phase called the peak. And the reason why I call it the peak is because it was the most busy time of the year, really. It's kind of, I would say, started into the end of last year, November, December, but really elevated when it came to January and February. During this time, interest rates were still very, very low. With the really low interest rates, there's very little supply out there. A lot of people weren't selling their houses. Really wasn't a ton on the market. Added on to that, there was a lot of FOMO along a lot of buyers. And what the FOMO really means is fear of missing out. And what that means is a lot of buyers, they thought that prices were going to keep going up and prices were going to become unrealistic. Everyone thought they were a real estate investor. Everyone wanted to buy real estate because it was just a popular thing to do, as sad as it sounds. But when it's a popular thing to do, there was a ton of buyers in the market. They thought the market was invincible. So because there was a fear of missing out, everyone bought, with no thought that there would be repercussions for the actions of so many people buying. And there's, again, so few properties are selling. And with so few properties in the market, there were a lot of multiple offers. I remember earlier in the year, there were situations where you had properties getting 20 offers, and that wasn't even a surprise. It was normal. There even were properties that were luxury in the 2 million plus that got 3, 4, 5 offers. Every single part of the market was hot. Everything was selling. Everything was underpriced and then sold much more over asking. It was a very, I would say, unprecedented time in real estate, but it was a point where everything was selling for hotcakes. And it was probably, and that's why I call it the peak, because at the point where, let's say, that all stopped, prices were at an all-time high. We saw a huge appreciation. We'll see in this graph over here, the amount of appreciation for some properties, especially detached, they saw a really big spike going up. But that I would call as the peak. It was the busiest time. The interest rates were unprecedented low because when they dropped interest rates during the pandemic, they were still at that low level. And yeah, we're going to call that first section the peak, where everyone was buying and very few listings were on the market. So prices really shot up. What comes up, it has to go down. And that's where I call it back to reality. And that really started when the first interest, maybe not the first, but the second interest rate hike came around. The Bank of Canada started raising interest rates to combat inflation. Inflation was at an all-time high with the pandemic and a lot of other factors. But with inflation so high, they had to raise interest rates. And they did it at a very unprecedented rate. They did it, it was 2.75% over the past 6 months. And it was a very quick, you'll see over here, the tightening of interest rates was really, really strong. And that really had real estate to a standstill. People stopped buying. There was a big shock in the market. People were really not confused, but there was a shock. People didn't expect interest rates to increase this quickly. The Bank of Canada even said that they weren't anticipating to raise interest rates this early on, but they did. And with that happening, there was a big shock to the market. Demand plummeted. The FOMO was gone. No one was fearful of missing out. People just did not want to buy at that point. And understandably, it's a very scary time. So when that happened, buyer demand dried up really quickly, and a lot of properties shot down in value. I'll throw up another couple of graphs over here, but you're seeing demand drop to the point where pricing dropped from the peak anywhere between 10 to 25%. Like, it was a big dramatic drop. A little bit different year over year, but when you're looking at that really quick spike going up, that spike coming down was just as strong. So it was a very dramatic, I would say, 3 months. That time was anywhere between April to about September. We saw some pretty sharp declines from that time period. And it was a difficult time. A lot of properties, I remember, They were expecting prices that they saw in February and March, and their list prices, even let's say in June, were reflecting, let's say, what they wanted in February. And they probably would have got that price point in February, but very few houses were selling because price points were unrealistic. The only properties that were selling were the ones that had a really aggressive price point, and there's very few buyers out there. So if so many overpriced properties, these buyers are going to float towards the least priced properties. So that was very important. And during that same time period, rents really shot up. Particularly condos shot up. Rent across the board went up, but condos really jumped up hundreds of dollars in most cases. I remember one bedrooms, before the fact, they were in the low 2,000, maybe 2,100 you can get a one bedroom for. And now you're looking at $2,500 to rent a one bedroom condo. So it happened across the board, but rents really jumped up because the affordability was so low. And the interesting thing about that is because interest rates are going up, buyers now could afford less. So let's say they were searching for a property to buy in January, February. Let's say they could afford, this is obviously off the top of my head, but let's say they could afford before $600K with their current qualification. With interest rates going up, their price point that they can afford went down. So they no longer qualify for $600K. So house prices had to go down to reflect the change in the affordability. So maybe now they can only afford $550 with the new interest rates. Price points, they had to drop for the transactions still happen. But then again, instead of people, let's say, buying at $550, a lot of people decide just not to buy in general because it just was a too risky market and there's too much uncertainty going on with future interest rate hikes. And now we're looking at the calming period. And the calming period is interesting because, we had that really sharp decreases for a lot of these property types. But a lot of them, they couldn't keep going down that quickly. So I called the setting out period. A lot of the prices have flattened. They may change a little bit month over month, but you're not looking at major changes. There really wasn't a sharp increase or decrease either way. And that's ironic because interest rates were still going up. But so we'll see what effect it has long term. But prices definitely flattened out during I would say from September to present day. We've seen some pretty flat prices. December has been a little bit lower, but we've seen some pretty flat prices for the past few months in real estate. We don't know if that's a bottom, but it's definitely showing in the short term, this is the lowest that it's gone. With that being said, similar to before, prices have been, or listings have been very few and far between. Most people aren't motivated to sell when they saw prices being so high. They don't want to sell in their minds as a discount. And it very well maybe isn't a discount because we don't know what prices are going to be in the spring. But in their eyes, they either wait until spring instead of putting the property in the market and selling for less than they would have got in February. With that being said, too, sales volume dropped 50% throughout the year. You're looking at about half the property sold compared to last year. Last year was a fairly busy time in real estate. So every 2 houses that sold in 2021, 1 house sold in 2022. So it definitely was a slower market. You're seeing a lot of people, only the people that really had to move were buying, or the people that really felt that it was the right time for them. So, calming period in the sense that prices really calmed down and activity really calmed down. It definitely is a much quieter period. And the one thing that's interesting, especially going into December, is the year-over-year changes in active inventory also shot up. And with you'll see this graph over here. December usually a lot of properties come off the market because no one's really selling. But active inventory is definitely at not an all-time high, but it's definitely much higher than it was last year. It'll be very interesting to see how that goes over the next year. But with a typical holiday period, it's slowed down. It's a little more quiet going into the new year. So those are my self-proclaimed phases of real estate. And I use it more self-proclaimed because it helps explain the real estate market a ton. A lot of high highs and a lot of low lows. And then the middling period of a steady out period. If you look at this graph over here, it shows the average Toronto home prices. And it shows blue being detached, semis being orange, gray being townhouses, and condos being yellow. And you kind of see those phases there where you see that really big peak in February, March, and then that big sharp decline when it came to May, June, July. And then obviously in the September, October, November, it steadied out a little bit more. But we're going to break down all 4 of those property types one by one now. We'll start for detached homes. Important to note is that your blue stands for 2022 this year, and your orange is from last year, 2021. But you look at the peak, it's very obvious. It's from, you're looking at February where you're $500,000 more than last year, February. So there was a huge discrepancy of value year over year. But as interest rates were announced, you could see that nosedive that real estate prices in the detached sector took. And with July being the lowest and August kind of being the more realistic bottom that you're seeing. And then after September, things are really steadying out and not a ton of changes. But it's interesting because if you bought a property, let's say from January to May, you're doing much better year over year compared to when you bought something June, July, and onward. You're actually doing worse year over year. The big struggle for a lot of people buying detached homes were the people who bought in January, February, March, where the prices were at their peak, and now took that full nosedive from the bottom. So that's something that's really, fairly concerning when it comes to detached looking homes. Now on to the semis. Semis have a very similar story. You're looking at huge, in this case the peak being in March. March you're looking at just over $200,000, that difference for the average semi selling price in Toronto. But once March came along and interest rates started going up, semis fell fairly quickly, and the bottom being in August, a little bit later than the detached homes. But they took a fairly big nosedive. And it's a similar story where if you're in January to about May, you're up year over year. And the moment it crossed over, it kind of stayed below the whole time. What's curious about semis is, if you look at last year, that's when the semis really started taking a big hike in their price. They really started increasing in August, September, October. And that's when you notice maybe how busy the real estate market was at the end of last year. But I would say semis and detached homes are very similar in how they reacted to the interest rate hikes. The next factor we're actually going to combine, townhouses and condos, because they're a very similar story, and I think it would be important to look at both of them at the same time. Compared to your detached and your semis, where they took a big dip towards when March happened, and they ended up being worth less than they were year over year by the end of 2022, we're looking at Toronto condos and townhouses. They both kind of spiked. Again, blue is being this year. They both spiked and were worth much more than they were worth that time last year. In about March, maybe April and February. So around that beginning peak time is when townhouses and condos were worth the most. But what's different with this type of property is as interest rates went up, you don't see that huge spike down in prices. They definitely come down back to reality, but you're looking at two property types that are entry-level price points. So for a first-time buyer perspective, these properties are worth about the same they were this time last year. You're not seeing a sharp decrease from this time last year. You're seeing a much more attainable and resistible property type when it comes to these. Mostly, I think, because they're an entry-level price point. More people are interested in this type of property because more people can afford this type of property, more demand for this type of property. And they're not as skewed when it comes to your luxury type homes. But they come right back down to reality. They're very congruent, not congruent, but they're very similar to the prices of 2021, and they don't really go off that mark very much. So for me, it looks attractive as a first-time buyer because it's a much more resilient property type. Obviously, we'll see what goes on in the future, but these properties are much better than your detached and your semi-detached homes when you compare all the property types. I'm looking at a couple of key statistics before we move on. The most important thing here looking is your 2021 is your blue and your 2022 is your orange. So it's reversed now. Your number of solds are interesting because after your peak, the volume of real estate drastically went down. You're actually down about 50% most of the year. And because it's so seasonal, you'll find that, number of solds will kind of bottom out during the summer months and during the winter months. But you're going to notice that it's consistently, no matter what the season, it's down about 50%. Properties may rise a little bit here and then go down a little bit over here because it's seasonal, but the volume is throughout the board is down. And that's also because demand is so low. And it's also because less properties are on the market. But it shows that the interest in real estate is not even close to where it was this time last year, where it was very, very busy and really starting a big FOMO market. Really quickly, we'll touch on some rent numbers. We had a really strong rental market in the summertime where rents really kind of peaked up, mostly because a couple major reasons. Affordability was low, so when people, instead of buying in the market, they wanted to rent instead. So that was a lot of demand for people to rent. And then because we have a very strong international student basis with some strong universities, whenever it comes to September, a lot of people want to rent in Toronto to get ready for the school year. With a hard deadline, a lot of demand was in the Toronto condo market and really pushed up prices. A couple examples, you're looking at some June rents. Some June rents you're looking for a studio was about $1,900, and then in the peak you're looking at about $2,150. So just right there, you're looking at about $150, $200 increase in rent just for studios in a matter of a couple months. Same thing with one bedrooms. They used to be in the 2200s, and now they're in 24s. So it's a trend over there. Rents really shot up in a short amount of time. They steady out after, I would say, about November, December, and a little bit of October. They've steadied out at their current high, but they really aren't going down right now. They're much more expensive than they were this time last year. Your current rent right now for a studio in Toronto, you're looking at about $2,100. Your current rent for a one bedroom about $400, I'd say. Your current rent for a 1+10 is about $26, and then your current rent for the 2-bedroom, you're looking at between $3,000 and $3,200 for a 2-bedroom. So that's where rent prices stand right now going into the new year. I'd be curious to see what the new year kind of brings for how rent prices changes as let's say the real estate market changes as well, the purchasing power. I have a lot of rambling going on, but I promise we're almost done. The one thing I want to talk about a little bit more is where we see the future going. And I've kind of hinted it a little bit going throughout. And if you watch my past videos, I talk about this a ton. The most important thing that I think is going on is a lot of people don't want to sell their properties right now because they realize that their property is worth much less than it was in February, March. And with that idea in their head, they think it's potentially, the same thing's going to happen in 2023, where in February, March, April, prices are going to shoot up and they're going to sell for those big highs that they once got. So a lot of people are holding on to their property for a spring market. And I'm a bit concerned about that because I think if a lot of people hold on to their property only to put it on all at once during the spring market, I think it actually can have an opposite effect on real estate. Because demand's not going anywhere most likely. We don't know, but I think demand's probably going to stay where it is with interest rates staying at their current high price points. If demand stays the same and supply jumps up with so much new inventory in the market, prices may have to go down because only the best properties are going to sell. There are a few buyers on the market. It may change the real estate for the future. And again, that's not a prediction. That's something that I'm keeping my eye out and that could happen. But for a lot of my first-time buyer clients, what I'm telling them to do is let's track these numbers, let's track these trends. Because if we go into spring with a similar story to what I just told you right now, it may be a situation where you may have a lot of opportunity out there for a first-time buyer. Interest rates might be a little bit higher, but you're going to see prices that we did not see for years. And it'll be very curious to, instead of, the best way to look at it, interest rates you date. You can change your interest rates will go up and then go down. But a purchase price, you're going to marry and you're going to keep that purchase price forever. So it's very important that we look and keep track of these trends because I think the spring is going to make or break this real estate market. It may cause real estate to go up, who knows? But it's very important for a first-time buyer, let's say like yourself, to track these numbers, get in touch with someone like myself who's going to help you really navigate this market and be able to read these numbers a little bit better. So maybe all this information I'm giving you is just numbers here, numbers there, numbers there. But the trends are really important to keep in track because that's how we're going to find out if this real estate market's for you or for not. And if you have a place and if you can make your first big move. And you know what? If it's a place where you can make that first big move, maybe is it a place where we can rent and get a great deal or rent and find a great neighborhood to start raising a family or to go to school. It's important that we track these numbers and get a good sense of what Toronto real estate has to offer and not go in blindly. My goal is to educate and have people well informed of the moves that they're making. And if I can do it by this way, by whatever way, by consulting, by webinars, whatever it may be, to educate first-time buyers in this market, I want to do it. And I think I'm doing my best to do that. I think I can tell you through clients who purchased it in the past few years, they're very happy with the way we go about it. So, I think it's something that can work for you. And rambling on again, that's the Toronto real estate market. That's what happened in the Toronto real estate market. And that's the roller coaster that we signed ourselves up for. I'm looking forward to 2023. Personally, I'm looking forward to helping a lot of first-time buyers get into the Toronto real estate market. And if that's you, first off, subscribe, go to my Instagram, follow me there, get a sense of my content and get a sense of what I do for first-time buyers. And second, when you're ready, you're curious to see what's going on, I will happily buy you a coffee and talk about the real estate market. As you can tell, we're probably at 12 minutes at this point, which is a long video for me. So the fact that I'm still rambling on, I know my stuff. I like to talk my stuff. I'm very passionate about this type of stuff. If you want to talk more about real estate trends and how it affects you in your situation, let's have a conversation, book an appointment, or send me an email, and I'll happily to grab you a lunch or a coffee. Anyways, Gabriele Battista, Homes into Reality. Talk soon as always. Bye.